Ladies and gentlemen, good day and welcome to the Ajmera Realty Infra India Limited Q2 FY23 results conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jay Shah from Dolat Capital. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us for Ajmera Realty and Infra India Limited second quarter financial year FY23 conference call. We will begin the call with opening remarks from our director, Mr. Dhaval Ajmera, and business performance from our CFO, Mr. Nitin Bhavasi, which shall be followed by a Q&A session. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature, reflecting our future outlook, and they involve certain risks and uncertainties that the company may face. We have already shared the operational updates of the company in the first week of October 2022. The investor presentation and the press release based on the financial results adopted by the board can be downloaded from the website of our company and have been uploaded on the stock exchange website as well. I would like to hand the conference over to our director, Mr. Dhaval Ajmera. Thank you, and over to you, sir.
Thank you. Good evening and hello, everyone. We are pleased to connect with you again for our second quarter FY23 Ajmera earnings conference call. I look forward to interacting with you all as we move on to the next phase of the growth at Ajmera Realty. I'll begin by discussing the real estate outlook, business highlights of this quarter, followed by the operational and financial performances highlights, which will be done by our CFO. Real estate in India is really looking exciting. Things have been really good post-COVID. And it is, I would say, one of a very exciting phase for real estate in India. Coming to the Indian economy, I think also we are seeing a buoyant and, Indian economy being really buoyant, even though there are concerns of surging inflation, rupee depreciation, and other geopolitical concerns. But in spite of all this, the real estate sector is also moving great, is also banking on accelerated demand momentum in spite of interest rate hikes. People are more confident about real estate today than earlier. Rising income and employment opportunities, favorable sentiments towards commercial real estate, broadening of leasing activities, need for personal and financial security, and desire for spacious home with health and wellness amenities will further boost the demand in the sector in the coming quarters. The steps taken by the government to support the real estate industry and a series of favorable regulatory and policy moves has also encouraged development and investments. This will further enhance the momentum in the coming period. I'm happy to announce that this half-yearly results has been one of our best results so far, where we have done a sales of over 566 crores, which is up 181% year on year, and about 1.3 times higher than our sales value of FY22, which was 431 crores. As far as our quarter goes, I'm also happy to announce that our revenue and PAT during this quarter has also been a decade high of 187 crores and 34 crores respectively. We launched the Ajmera Manhattan project in the beginning of FY23 and have received a tremendous positive response, with about 33% of Manhattan inventory being already sold in the span of this 6 months. This project was also recognized as the top-selling housing project in Mumbai eastern suburbs from April to June 2022 as per the CRE matrix data. The Greenfinity project at Wadala is also a perfect example of our fast-tracked execution capabilities. The superstructure of this project has also been completed in nearly 14 months, and it is now at a finishing stage, and 73% of this inventory is already sold. Looking at our commercial project, Sikova at Ghatkopar, which is a boutique office development, This project is also at finishing stage, and we are about 66% of this inventory sold out. In the Wadala suburbs of Mumbai, we offer variety of options with ready-to-move-in OC-based projects, luxury projects like Trion, advanced stage projects like Greenfinity, and recently launched compact luxury segment at Manhattan. So it has a complete spectrum of projects and developments happening at Wadala. Coming to Bangalore, where our presence has always been there in the mid-luxury segment, and I'm happy to say that our project Ajmera Nucleus, the Wing A and B OC has been received during this quarter, and we've also sold about 77% of our inventory in residential segment. This also includes that construction of our Nucleus C Wing and our affordable segment in Lugano and Florenza, which is in the northern Bangalore, is also under construction, and looking at current developments, it is moving expeditiously well. We have also received OC for our Nucleus commercial project during this period, and now we are confident that in the coming few quarters we should be able to sell this project as well. This is Bangalore, and we are proud to complete a variety of inventory with ready-to-move-in, mid-luxury Nucleus projects and affordable options in Lugano and Florenza. Coming to our high-end redevelopment project, Ajmera Prive at Juhu in Mumbai, which is a self-funded project and is progressing well. We have now received the RERA in October 2022 and have commenced the work, and commencement certificate and other approvals have already been received during this quarter. In order to maintain the launch momentum, we have obtained financial closures with a reputed global bank for our codenamed Ghatkopar project, and the launch is very well on track. We have already acquired the land rights from Tata Communications, where we plan to develop a residential property with a potential carpet of around 1 lakh square feet. Ajmera Prive and codename Ghatkopar launches will enable us to sustain the robust launch momentum in the coming quarters. We further plan to launch 2 more projects in the central Mumbai region during FY23 and FY24. The estimated revenue of these 4 launches is close to about 2,200 crores. We have a revenue visibility of 2,100 crores from our ongoing projects, bringing the total revenue visibility of around 4,300 crores. We have a further potential development of 11.8 million square feet from our own land banks in the MMR region. And moving forward, as a part of our growth strategy, we are also evaluating very active asset-light JV, JDA or DM model or redevelopment opportunities in Mumbai to take our growth potential higher. With this, I would like to thank all our stakeholders that are enabling us to implement our strategy towards the 5x growth plan. I am very happy and excited that the growth plan which we have worked towards and the company is progressing well in this, and we should be able to achieve our results as we have done in the past quarters and this quarter as well. I would now like to hand over this call to our CFO, Mr. Nitin Bavasi, who would like to take you through the operational and financial performance highlights. Thank you.
Thank you, Mr. Ajmera. Good evening, everybody. I now take you through the operational and financial performance of H1 and second quarter of FY23. Our variety of offerings at Mumbai and Bangalore has ensured a strong performance from our customer base, resulting in very robust performance. On the operational front, we have delivered a healthy half-yearly performance with our sales value increasing by 181% year-on-year at 566 crores. It is significant to note that first half sales value number has been 1.3x of the annual sales level of that of FY22, which was 431 crores. The sales volume for this period stands at 237,415 square feet, which is significant increase of about 106% on YOY basis. This impressive value was achieved due to successful launch of Ajmera Manhattan and steady sales from the existing projects like Sequoia, Greenfinity, Nucleus at Bangalore. Our collections remained very impressive with 44% year-on-year growth and which stood at 312 crore. The realization per square feet also has been improved number. It is 23,844 rupees per square feet for the first half as against 17,460 for the half of FY22. The quarterly operational performance really exhibited very healthy improvement with sales improving 83% YOY at 166 crore in sales volume improving by YOY at about 80,000 square feet. The collections for the quarter remained stable at about 102 crore. The realization for the quarter 2 FY23 have improved to 20,760 per square feet as against 16,867 in quarter 2 of FY22. Coming to the revenue side, our total revenue for H123 stood at 242 crore, which is 3% YOY increase. Our EBITDA stood at 76 crores, which is 29% increase YOY. The EBITDA margin stood at 31%. Our PBT stood at 61 crores, which is 109% YOY increase, and PBT margin also expanded to 25%. PAT level, we have exceedingly well at 46 crore, which is about 111% YOY increase, and PAT margin stood at 19%. This PAT of 46 crore, I am honored to say that it is equivalent to that of the entire annual PAT of FY22. Our total revenue for quarter 2 FY23 stood at 187 crore, which is 87% rise YOY. Our EBITDA doubled during the quarter and stood at 58 crores as compared to 133% YOY increase. The EBITDA margin stood at 31%, PBT at 46 crore, which is 209% increase YOY, and PBT margin at 25%. PAT grew by more than 2 times on YOY basis and stood at 34 crore, and PAT margin significantly improved to 18% as compared to 11% in quarter 2 of FY22. Margins have improved due to successful launch of the high margin project composition, which is the Ajmera Manhattan. The revenue growth has been accelerated and there is a sharper visibility of revenue, especially due to front-ended costs which we have incurred, and as we guided since last about 2 to 3 quarters, since we have paid the approval premiums in December 21 under the concessional window, and this has really aided by our operational improvements and the sales which we have clocked in this particular time frame. Our outstanding debt as on the quarter end is about 826 crore. The increase in debt is due to the one deal for the Ghatkopar project which we have closed out in this particular quarter end, and which we are very confident to bring the launch of that particular project as well in very quicker soon. The weighted average cost of the debt is 12.6% per annum as on 30th September, and debt equity ratio is 1.11:1 as on end of this September. We have a strong visibility of around 2,045 crores from our existing portfolio in terms of its revenue. From our OC received projects, we have balance revenue from sold inventory is about 7 crore, and the balance unsold inventory revenue at 145 crore. From advanced stage projects, the balance of sold and unsold inventory revenue is 125 crore and 185 crore respectively. And the third bucket, the mid-size projects, the balance of sold and unsold inventory revenue is 394 crore and 1189 crore respectively. We have estimated cash flow of about 860 crore from our existing portfolio. On this particular high note, I am requesting the entire forum to now being open for the question and answer session and more interactions. Thank you for the patient hearing.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and one. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Mihir Thakkar, an individual investor. Please go ahead.
First of all, congratulations for the wonderful set of numbers. Dhavalbhai, I just need updates on our Kanjurmarg land and on our commercial land parcel at Wadala. So what's the current status on both?
Sorry, Mihir, I cannot hear you clearly.
Hello?
Yeah.
Okay. Dhavalbhai, I just need update on our Kanjurmarg land and on our commercial land parcel at Wadala. So what's the current status on both?
So Kanjurmarg land also is moving progressively good. We are expected to close the loose ends which are there in terms of little bit of approvals and all of that. And hopefully by next year we should be able to bring this up on the table. As far as the commercial is concerned, we have waited for the NCLT orders to come in, and also we are in active discussions and making the planning for the commercial tie-ups as well as the development progress. So that also should be under progress. So we are actively. So right now the Wadala commercial belt is now slowly starting to see some momentum because of the connectivity, and our belief is by next year when the connectivity of the Shivri-Nhava Sheva link road, which is connecting to the new airport, which will be done, by then we will see a greater momentum and demand coming. So I think we fit in well, and that's when we feel we should really put the project on the block so that we get the right kind of valuation.
Thank you. Thank you so much. That's it from my side.
Thank you. We'll take a next question from the line of Bala from Arihant Capital. Please go ahead.
Good evening, sir. Congratulations for a good set of numbers. Sir, around 4,300 crores of revenue potentials. This how many years it will be the potential having? It will spread how many years?
So broadly, it is as we have showcased that it is composition of the OC-based project, advanced stage completion, and as well mid-size, and as well to be launched kind of a thing. So in terms of the broader timelines, it should be 3 to 5 years.
3 to 5 years.
Yeah.
Sir,
But, in terms of OC and the advanced stage completion, it's much earlier than that.
Okay, sir. Sir, I have seen the industry conversion rate around 8%. For example, if 100 people are visiting to see the flats, around 8 flats are sold. So what is the average conversion rate for Ajmera Realty?
So every project has a different percentage. If it is an affordable segment, it goes higher up to 15. But if it is a mid-luxury like our Manhattan project, it comes to around 8 or 10. So our mid-average is around 10 to 12%.
10 to 12%. Okay, sir. Sir, rising right now the rising interest rate, how you are seeing the demand from customer side?
So as I said, the demand is pretty good, even though the interest rates have risen over the last few months. But nevertheless, the demand has been pretty consistent, and people are still coming up for their requirements. While we may face a little bit of hitch here and there, but people eventually take a call and they move ahead. So far we've not seen too much of resistance coming due to the higher interest rates. So I mean, my good sense is that maybe going forward, if the interest rates really blow up higher, then probably might be a resistance coming from the customer. But looking at the scenario with the way demand and real estate is moving, I mean, at least I believe that the government probably would not jump in or hike in too much of interest rates, costs, which will continue with this momentum which is going right now.
Yeah, okay, sir. So I have seen that margin improvement is there, like commodity prices are softening. We may expect further margin gain for next 2 quarters.
Yes. Yeah, go ahead, Nitin.
Go ahead, sir.
So we are, as we seen that, post-COVID, there was a significant rise in the input costs, and it so happened with us is that while we launched the project, from the time we launched the project till now, over the last 6 months, we have seen softenings of the commodity prices, although they have not gone back to the pre-COVID levels, but definitely has reduced from what it was for that particular period of time. And in our calculations and moving forward, the margins will improve for our projects which are own land banks like the Wadala one, where we are looking at a better margin, and this will eventually also start seeing better margins coming in the average scheme of things.
And just to support on the operational side to this, contention which Dhaval mentioned, few of the high margin product like, Manhattan, which is giving a good kicker to the overall margin expectation. The Greenfinity project, which is a unlevered project, which is, giving further boost to the, because there is no leverage to that. As we go on, our plan for the Ajmera Privy project is also to go for a self-funded project, so that is also going to add on to that particular, unlevered project portfolio kind of a thing. So all these steps put together, we are very confident that going forward we should have a good traction in the margin as well.
Sir, we have seen very good improvement on realization side. So what kind of price hike we have taken in this quarter?
So on an average, if you have the numbers, please go ahead.
Please, sir, go ahead.
So on an average, we have seen that, the margins, we have incremented the prices for our, the projects at Manhattan and at other projects as well. But it purely is a question of demand and supply, and also looking at the demand for our projects. We have increased our sales price in Manhattan by about 5-6% in this last 6 months from the time we launched till what we are now selling. So going forward also, we would take this call depending on the velocity and the demand. But our aim is to ensure that we continue with this velocity to make it as a great sellout project in coming years to come.
Thank you so much, sir. That's it from my side.
Thank you. Before we take our next question, we'd like to remind participants to ask a question. You may enter star and 1. Our next question is from the line of Rahul Talwar from AB Advisors. Please go ahead.
Hello, am I audible?
Yes, please.
Yeah, hi sir. Good evening. Sir, I had a few questions. So first one would be on, so if it would be really helpful if you could update us on what is stopping us from launching the Kanjurmarg project, and also if you could update us on the project which is going on in Juhu.
So as I said earlier, Kanjurmarg project is a larger one. It has while we want to launch the project, but we also need to look into all the approvals and formalities which needs to be taken care. Where we are moving progressively well in terms of our approval processes and government permissions, which we believe that in coming years, because this being a largest project, it requires environment clearance, it requires government of NOCs, it requires police housing NOC. There are n number of approvals which is required. So which we are working on that, and hopefully in the next 6 to 9 months we should be having all of them in place, and then we launch this project so that we go at a smoother pace when we start the sales. So that's progressively well being taken care. And as Juhu is concerned, we were awaiting our RERA approvals to come in, which has come in October. And the work at site has already started. The building has been demolished. Foundation work has already started over there in terms of excavation. So that is also progressing well, and we should be on time to finish and probably take up sales over there.
Okay, understood. And how does your commercial pipeline look like? Let's say for next coming quarters.
So, as we mentioned that our Sikova project, which is in Ghatkopar, is already 66% sold, and we are under finishing stage. So usually commercial projects come under more demand when the project is nearing ready or it is ready or completed. So we are very confident that although we have sold at a very high percentage is already being sold. 2/3 of the project almost has been sold. During construction, we are very confident the balance 1/3 will also be sold pretty soon while we finish or just we are about to get ready and have OC. So which is in a matter of next 2 quarters is what we see. Going forward, even our Bangalore project, which is at Ajmera Nucleus, there we've received OC. We are getting good demands coming in from the different sectors over there. So that should also be on the uptake in the coming quarters. And moving ahead, by next year, as I said earlier, when we feel, when there is more and more demand coming and we see the price getting at the right time, we should be able to launch our commercial portfolio of Wadala too. So I think in coming quarters, these Sikova and Nucleus in Bangalore will come up for their sales, and by next year sometime we should be able to launch our Wadala commercial as well. I mean, we should be able to take decisions on our Wadala commercial because we will start seeing active demand and coming in from that segment as well.
Right. I get it. So, and my last question on the industry side. So, would like to know how will the hike in repo rate impact the real estate market, or do you feel it impacted the demand, especially during the festive season?
So we have, as I said earlier, even though the demand, the interest rate has increased, but it has not significantly impacted the sales. I personally believe that psychologically the interest rate when it is around 8% or something 8 to 9%, but when the threshold goes, the home loan threshold goes beyond 9, that's when people would start feeling a little jittery or probably stop being a little resistant. But I'm not seeing that happening too soon, and even if it happens as a strategy call, we probably might observe some of the interest rate to ensure the sales velocity don't dampen. But overall, in spite of the hike, we still feel that the demand is good and people are taking calls for such projects where they feel confident about the progress and the brand which will deliver.
Okay, sir. Understood. Yes, sir. That's all from my side. Thank you so much and all.
Thank you.
Thank you. And next question is from the line of Avinash Gupta, an individual investor. Please go ahead.
Hello. Am I audible?
Yes.
Yeah. Hi. I am a new investor in Ajmera, to be honest. My basic question in terms of last 10, 15 years, right? The times for real estate were difficult. And you were one of the few companies who actually stood that test. Brand, there is no issues. Execution, obviously, is one of the best ones. That is what my experience says, to be honest. I'm looking at what is a broad strategy 5-7 years down the line, right? What are the kind of, because residential we are already in. Execution is not an issue. We tested the difficult times, right? So residential is the only area we are looking at, or we are looking at other opportunities as well. Something like redevelopment is one. Small projects we are looking at, right? But in terms of special situation assets from financial institutions, right, commercials or even logistics and those areas as well. That is my...
Yeah, sorry. So as a part of our growth strategy, where we have internally decided that we want to grow 5x from where we are, the demand for real estate is looking good and the overall market is supporting. We have shown and performed from the time post-COVID, and we have seen significant improvement in our results, and that has been on the table and that has been seen. Moving forward with our existing land banks, our strategy is very clear that we already own a significant amount of land within Mumbai region to, make our company grow where we are today and reach at 5x. But at the same time, having said that, we are also moving into asset-light projects like JV, JDAs, redevelopment, and Juhu project is being one of that. We did the Sikova project in Ghatkopar West, and now we are doing the residential project in Ghatkopar East. Those kinds of projects will also come into the portfolio to, make our company grow in different areas of the region. And at the same time, very aggressively looking at a few more redevelopment projects and JV, JDAs as a part of our growth strategy. Apart from this, obviously with our existing land bank portfolios and projects which we already have, which is already designed and towards the launch, pipeline coming in the coming quarters and years in the next 2 to 3 years.
Okay, so basically the focus at the moment is whatever we have on the plate, right? And that is something which you want to utilize.
No, beyond what we have, we also are, as I said, we are discussing with existing developers who are in the need to do some JVs or JDAs, and also with many societies in Bombay for redevelopment projects in different regions.
Dhaval, my background is I'm primarily a private equity guy, right? Almost for the last 15, 20 years practically.
Right.
Private equity always, because I can come from that perspective, right? Private equity guy will always look at a company who has good credentials and execution skills. Okay. So we have actually, because I'm saying from Ajmera perspective, right? We have sustained those 10, 12, 15 years later, the previous ones, right? Where the market wasn't that great, right? Now probably is the time to take that quantum leap. And I personally feel that is my, in the sense, I'll not say suggestion, but this is like my experience, because private equity can surely help you guys in terms of putting up the business plan for areas which is outside residential. Residential surely they can support. That's not the issue. That is a core area, right? But say in terms of logistics or in terms of even coming up with commercials or industrial parks or even smart cities, to be honest, right? Or even taking over distressed assets, the large distressed assets from the banks or from ARCs, right? Those kind of things, a lot of private equity guys will be willing to support you in terms of the financial execution. I think we have a complete team, right? Execution, from my understanding, for Ajmera, execution is not an issue, to be honest, because they have a pedigree, 50, 60, 70 years of pedigree, right? The team is good. Team is good in the sense, even the family, there are 6, 7, 8 people, right, who can manage different verticals. So I was coming more from that perspective, right?
No, you're absolutely right.
Yeah.
We are in active discussions with a lot of private equity players who are looking at, having at a platform level deal, or probably come in at a, greenfield or a brownfield project where they see significant support or significant confidence in us, and obviously with our experience and trajectory, they just want to see. But we are in good active discussion. So obviously, as a part of our growth strategy, tie-up is also one of our segment where we are looking, and we hope to crack some deals soon to probably announce, maybe at a platform level or at entity level, for a greenfield or a brownfield project coming up soon.
Because probably I'll say Arcel is something which is now practically controlled by Avenue Capital, which was my previous organization, right? In terms of assets, right, there's one Devu factory which is around 47, 48 acres land in Noida, NCR, right? It's on the same 76, 77 sector bench, which probably, I've recently seen it, it can be actually a good place for logistics from residential kind of scheme, right? Now, my second question is, we guys already have plans where we were looking to demerge the particular business, right? Now, where do we stand in terms of NCLT on that?
So, as I said, we are progressing on that, but we demerge process is on. But we firmly believe that while we launch the project or we do some tie-up, there should be a confidence and demand also which for that sector which should come in, which we are fairly seeing incremental or progress in a Wadala belt for commercial basis due to the infrastructure, coming sectors or infrastructure activities which are coming up in that belt. So with those coming up, obviously once there is an infrastructure setup come in, automatically demand starts pouring in. So we are seeing now with the Shivri Nava Sheva belt, which is obviously going to start operations next year. We are looking and seeing a lot of private equity players looking Wadala as the next commercial belt, and even government over there is coming up with a lot of their offices and private IT parks or private commercial parks in that belt. So definitely that will be the next growth center after BKC because of its connectivity through to the entire Mumbai region. So we will see some improvements coming in the coming years.
So NCLT, do we have some final? Is this the hearing which is going to be, I guess, in November, right? Somewhere like 14th November or 15th November. Is that the final hearing, or are there going to be steps after that as well?
It's a final hearing. We filed the final petition, and few times it did not came on the board because of the load kind of a thing. So that is where the stage at which we are, and we are hopeful that once it comes, because it's a plain vanilla going into our 100% WOS kind of a thing. So the
lead banker has already come on board. Lead bankers have come on board, or
no, not yet. We are in soft discussions, because we want to complete this NCLT process, bring the asset into SPV level, and then very actively take the aggressive steps in that direction.
Makes sense. So is there any date now for the NCLT hearing? The final one?
Yeah, it's in the November month only. So it's more like, every monthly basis the dates are coming up. So we are hopeful that, once it comes on board, it should get through.
Dhaval bhai, कुछ setting meeting कर लो.
अगर हमारा होता तो कभी होते, but we are hoping to now see
NCLT में who's the judge now? Should come up. I'll probably take it offline because I can help you a bit there. Correct. Yeah. Thanks for that.
Thank you.
Thank you. Our next question is from the line of Ankita Sharma from Newland Investments. Please go ahead.
Hi, good evening. Thank you so much for the opportunity. I just had a couple of questions. I just wanted to check with you on the guidance for margins in the coming quarters. Like, will we be able to sustain these margins going ahead, or how is it going to go from here?
As we have explained the margin traction kind of a thing, because of the composition of the projects, like the Greenfinity, which is unlevered project, Manhattan, which is the very high margin project kind of a thing. Going forward, Juhu also is a high margin and as well unlevered project. So things of that sort, definitely we are hopeful and confident that margin will be more of expansion, and it would be a sustainable basis.
Okay. And sir, also about debt, any debt reduction plans that we have, given that the secured debt has increased for this time compared to last quarters, how is the guidance on that, and what would be the debt levels going forward, or what are the numbers you're looking at, and also in terms of ratio, debt equity ratio?
Sure. So debt equity ratio, although the absolute terms has gone up, but the debt equity ratio remains stable at 1.11 kind of a thing. So that shows that margin and the net worth is also expanding to have the stable growth debt equity ratio. Having said the guidance on the debt side kind of a thing, because we are in the growth trajectory, so at a project level there would be a construction finance and such kind of instruments which will definitely be in vogue and which would be requiring to fuel our growth kind of a thing. But the kind of operating cash flow repatriation from the UK market, which has started in this particular post this Q2, so that all and the monetization of an asset is also under the card, and which is progressing well. So things of that sort all put together should really help us to bring down this particular debt to a very sustainable, and as well we are working on a very strategic positions on a couple of project level where we can bring this entire debt to a much below 1 and significantly below 1.
All right. All right. That was really helpful. For any follow-up questions, I'll join back to the queue. Thank you so much.
Thank you.
Thank you. Our next question is from the line of Sashank Mahajan from Value Educator. Please go ahead.
Hello, am I audible?
Yes.
Yeah, thank you for the opportunity. My first question is on our international projects, specifically from the London. So we were expecting some repatriation. So anything is expected in this financial year, because now the situation in Europe is a bit difficult.
Certainly. So I'm happy to say that, post immediately on the closure of this Q2, we have received the first repatriation, and we are going to see a very series of repatriation expecting in next one in the few days. And that's how within FY23 we are confident of the repatriation to happen. And as against the barring, which is also a distant kind of thing, because we have inventory entitlement there. So there also within 1.5 to 2 years we should be having the repatriation initiative.
Okay. So can you please specify the amount, if possible, how much we already received and how much is expecting, and the timelines for the UK?
On actual, we have received about 5 crore from the UK, which is the first tranche of the repatriation. And within FY23, we are hopeful the balance, which is about 70 plus crores kind of thing.
17 or 70?
70.
70. Okay. Thank you. And my second question is, initially we have launched this Pune project, and then I think from last quarter onwards, it's not there on our presentation. So are we expecting to launch it in future, or it is not in a pipeline right now?
Which project?
At Pune.
The Pune projects, we are under discussions, and as we have already finalizing the planning of it, and we are tweaking a bit to ensure we get better velocity of sales and approval. So we are hopeful to, in the coming year, we should be able to launch some over there.
Okay. Thank you very much, and all the best.
Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Next question is from the line of Harish Shah from HS Investments. Please go ahead.
Thanks for the opportunity. I just have one question. Do we have more of a kind of redevelopment opportunities? Just we have bagged one in the Juhu.
So as I said, redevelopment is a long-term process where we obviously a lot of people members from the society are involved, and they have their selection process and the tender process. As we speak today, we are actively working on at least 10 to 14 redevelopment opportunities. Obviously, none being closed so far, but that takes time. But we are actively in discussions with a few and hopeful to close a few in the coming quarters. And then it will take its steps towards planning, development, agreement, and approvals, etc. But that's where we are actively working on that.
Okay, thanks. And if you can talk something about the monetization timeline for the pipeline projects.
If I can talk about what? Sorry.
The monetization timelines of the future projects.
So as we said that we have projects around 4,000 crores in sales revenue coming in the next 3 to 5 years from our already planned and assigned projects, which we should be able to launch, and some have been already launched, some are under pipeline, some will get launched in the next year's time, and these all will come under light, and in the next 3 to 5 years we should have these revenue recognized in our books.
Thanks for your answer. Wish you all the best.
Thank you.
Thank you. Our next question is from the line of Kasturi from LKP Securities. Please go ahead.
Good evening. Am I audible?
Yeah.
Yeah, thank you so much for this opportunity. I just had a couple of questions, one beginning with Wadala in particular. Now we see a huge land bank here and quite a lot of potential. Yet we're looking at only around 1 MSF, if I'm not wrong. So is there any particular reason for this conservative approach?
So as you know, we are it's not 1 million, it's more, but we we bring up to our books and under the launch things after we probably look into all the approval processes and planning and everything. And if I while we have the land bank, at the same time we also need to look at the demand requirements from that particular micro market. If I primarily launch, let's say 2 million square feet at a time, it's not that I will be able to have demand for 2 million square feet. So we have seen this micro market improving from time to time, and its demand also getting more, and with that we significantly, progressively feel that we will launch as we see the demand in Manhattan, at least 1/3 being completed and sold. In the coming years, we will see a better results coming, and we should be able to launch a new project soon. So that we just want to take step by step and then probably put. Otherwise, it will just not give us that kind of pricing and demand velocity if I launch everything together.
Right. I understand. If I may just squeeze in one last thing,
Sure.
Specifically connected to Bangalore. We see the collections from Bangalore slightly lesser, and again, is there any reason why? And what is the status of the projects in this market?
So we have 2 projects currently going on in Bangalore. Sorry, 3. One is Nucleus and one is Lugano and Floranza. So there are 3 projects which are going on. Nucleus is seeing a better, where we have got part occupation certificate for the project, and part is balance. And Lugano and Floranza is now under construction phase, and we will start looking at better demands coming in, and we will start looking at numbers coming from these projects also in the coming quarter. So these are the 2 projects where we are currently working on, and hopefully to have a few more in coming time.
That's great, sir. Thank you so much for taking my question, and I wish you all the best.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the floor back to the management for closing comments. Over to you, sir.
I really thank everybody to take out this time at evening and participate into our growth story and showcasing and giving us the opportunity to showcase our credentials and growth journey. And we look forward to interact with each one of you personally and virtually and showcase, as we move forward. Till then, stay safe, stay happy. Thank you. Good night.
Thank you, everyone.
Thank you, members of the management. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.